Just got back from ETH Denver doing a quick recording. As always, none of this is financial advice. Have the S&P pulled up here on a weekly time frame, and currently the S&P is bear flagging below the 50-week moving average. So that's not a bullish signal. Typically when we see this type of price action, it's an indication of people taking profits from massive rallies that we've seen from the COVID lows, securing, capital, making sure that they've locked in some gains and or taking some risk off. We have a lot of geopolitical risk going on. There's inflation, there's rate hikes, there's all types of reasons why you could pick a reason to not like the current market environment. But the reality of it is price tells us everything. Currently, price is bearish, and I am still leaning bearish this week. I think we do test these lows that we put in last month and potentially even lower. So I've been pounding the table on preserving cash when we go into no trends and downtrends, and that has been what's kept us out of all of this messiness. Back here we had 3 days where you could have gotten paid if you got in early. That's one of the benefits of trading futures is there is, basically trading around the clock. So if you are setting alerts, that's one of the reasons I like futures as well, is because I can use leverage and I don't have the time decay on options. So obviously I big into the indexes. And so this was a nice little 3-day run. You could have scaled, put your stop in at your entry, and you got stopped out. And then once again, you can never get back above the 10 SMA, which is the bottom of this cloud, and still in a bearish downtrend. So I'm still bearish this week. We have a fresh MACD bearish crossover. We're losing momentum, and technology is lagging. And that's not what you want to see. So technology is lagging and leading the way down. And currently it's trading below our quote unquote line in the sand for longer term investments. And so you'll notice, those of you that are members, you'll see on the playbook, there's the line in the sand. Well, that line in the sand means at that specific level, you probably want to protect profits, move stops up, get out of this index, whatever it is that you need to do to feel comfortable, because it's telling you below this price it's no longer bullish. Okay, so below 350, I don't like the Nasdaq. We get back above there, we can start talking again. But really, I'd like to see it back above the February highs before I felt comfortable getting bullish the technology sector once again. If we zoom out on the higher time frames, and the reason I sound like this is the higher time frames, they're telling us what we are already seeing on the daily time frame. So monthly time frame, we're potentially closing a no trend right here. We still have a week left. We could close in a downtrend on a monthly time frame. We haven't done that since December of 2018. And if you remember this was very tough trading back here. So this easy, face ripping bull trend that we saw from the COVID lows, where we were just printing money, that type of trading is over, and now it's time to be defensive and stay open-minded. So this week, obviously, we're going to have some short setups, but I always say you never have to short the market. We make our money in uptrends and getting paid in uptrends here, back here. We got paid in all of these uptrends. Now, not every single uptrend pays the same. And that's why it's important to get in early in the trend, scale profits, and move your stops up, and just trade like a robot every single time. And most importantly, have the discipline to know what the edge is. And right now, the edge is being in cash or hedging. If you're aggressive, you can take some of these short. I'm fairly bearish this market. So let's take a quick look at one of my favorite setups that we've been talking about for a few weeks now. We've been keeping our eye on gold, and originally we had our entry back here in the 169, 170 area, and then we had an add above this 174.20 with some levels above, and you can see we're basing above this 177 level, and I think it's very possible that we do tag 180 potentially this week, depending on what the market wants to do. But this is bullish, and I'm going to remain bullish gold, and it is our hedge in the investment portfolio, and likely will get some more attention this week after I'm finished with my scans. So gold, all time frames look phenomenal. Monthly, huge, massive cup and handle. Weekly, coming out of this flag into support, closing above the all-time high anchored VWAP, gaining momentum with the MACD, with price strength confirmation above the November highs. So I'd love to see this. This is a bullish setup, and we've been long gold for quite some time. So it's difficult to add here, even though I am bullish gold, just because we've already been involved with it, and we'll likely get a bigger position in the investment portfolio heading into this week, just because I really don't like the way the market's looking. Last but not least, as always, we take a look at crypto. Bitcoin, I had mentioned, needs to get back above 45,000. You saw it flirt with this level. This box has been drawn in here since we were below here. So this 4,500 level was a level that was interesting, and a level of interest for people trading Bitcoin. You can see it tested it twice, really, and then just now, we're rolling back over, back below the declining 10, back below a declining 50, losing momentum, and things don't look great for Bitcoin. So same thing with Ethereum. Doesn't look fantastic. Can these rip 10% to the upside? Absolutely. Can they roll over 20 more percent? Absolutely, right? So it's all about your time horizon with these cryptos. Obviously, being in ETH Denver just this past week, it was very exciting, very bullish on the long-term perspectives for blockchains, and primarily Ethereum and Bitcoin. Longer term, if we're thinking 3 to 5 years out, absolutely. Or if we're thinking 6 weeks to 6 months out, maybe not. We're still in a downtrend. We have to do what price tells us to do. You guys know our strategy is to get long and uptrends, and right now we're in a downtrend in both crypto, Bitcoin, and Ethereum. So I'm not somebody who picks bottoms. I like to see bottoming formations and bottoming patterns, and then momentum before getting long. So right now, can't be a buyer of crypto yet, just because the charts tell me not to. Doesn't mean I'm bearish long term. It just means I can't buy here. Just to wrap up, NASDAQ is lagging. There's a lot of risk in the market right now, a lot of headlines. You guys know I've been bearish, really when we go into these downtrends and no trends. Every time we go into a downtrend, I always preach preservation of capital, which means if you're trading, even if you're not experienced, moving that trading capital to the sidelines and waiting for higher odds and higher probabilities, because that's what this game is all about, is trading probabilities. And if you can lean that table and slant the chips leaning in your direction, over time you can be consistent. And the way that you do that is with discipline and patience. It's not necessarily in the trading. It's the mental game, the mental approach, understanding how to trade. And that's what I try to preach. That's what I try to trade and explain how I do it and how I've done it for so long. But this week, not a ton of high expectations. Continue to be patient. Continue to preserve that capital. And in the investment portfolio, we're going to continue to manage that. We have a very significant hedge with gold, and that may increase this week. So keep a close eye on the investment portfolio as well when I send out the playbook. See you guys in the morning.